For 167 years, it was the symbol of Swiss banking, Credit Suisse. It was the bank of spies, dictators, and billionaires. It was too big to fail. It was eternal. On March 15th, 2023, the bank died. It didn't just collapse, like Lehman Brothers. It was deleted, forced into a shotgun wedding, with its biggest rival, UBS, for just $3.25 billion. This was not a single event. It was a death by 1,000 cuts, a decade of breathtaking arrogance, and a series of financial scams so toxic it threatened to start the global financial crisis all over again. To understand the collapse, you must understand Credit Suisse was not a normal bank. It was a criminal enterprise, pretending to be a bank. For decades, they were caught laundering money for drug cartels, helping oligarchs hide their fortunes, and they were fined billions. They just paid the fines and continued the crime. But in the last 3 years, the rot finally broke the bank. It happened in 2 key events: the Greensill scandal and the Archegos explosion. First, Greensill Capital. This was a finance company that Credit Suisse loved. Credit Suisse sold $10 billion of Greensill's investment funds to their own wealthy clients. They told them it was safe, a low-risk investment, but it was a lie. Greensill, and it was not investing in safe assets. It was lending all $10 billion to a few extremely risky memory companies, all owned by one man. When those companies failed, Greensill collapsed, and the $10 billion that Credit Suisse promised was safe vanished. It was a devastating financial scam on their own customers, as they were still cleaning up the Greensill mess. Just weeks later, the second E-bomb went off. Archegos Capital, Billion Archegos, was a family office run by a man named Bill Huang. Huang was making massive $100 billion bets on stocks using borrowed money. And Credit Suisse was his prime broker. They were the bank, lending him billions to make these insane gambles. When the stocks crashed, Huang was wiped out in 48 hours. Other banks, like Goldman Sachs, saw the risk and sold fast. They lost nothing. But Credit Suisse was too slow, too arrogant. They were left holding the bag. The cost of their mistake? A $5.50 billion loss. No, in 1 month, the bank was crippled by 2 of the biggest financial scams in modern history. After Archegos and Greensill, the trust was gone. The financial statement was bleeding red. The wealthy clients, the billionaires, started to panic. A digital bank run began. In late 2022, clients pulled $120 billion out of the bank. In just a few weeks, the bank was dying. It needed one last lifeline. On March 15th, 2023, their biggest investor, the Saudi National Bank, was asked, "Will you invest more money?" The chairman went on live TV and said, "Absolutely not." That was the end. Panic swept the globe. This was the economic collapse everyone had feared. The Swiss government had 72 hours. If Credit Suisse opened on Monday, it would vaporize and start a global financial crisis. They were too big to fail. So the government forced a shotgun wedding. They called the CEO of UBS, their biggest rival, and ordered them to buy Credit Suisse immediately. UBS bought their 167-year-old rival for just $3.25 billion, a 99% discount. The bank was deleted. But this is the stinger ending. To make the deal happen, the Swiss government had to break the number one rule of finance. In a collapse, shareholders get wiped out first. Then bondholders get wiped out. That is the law. But the Swiss government changed the rules. They gave the shareholders $3.25 billion, but there was a special type of bond called NAT1 bond. The government made a single phone call and deleted 17 billion dollars of these bonds to zero. Poof. The shareholders got something. The bondholders got nothing. It was the opposite of the law. It taught the world a new lesson. Too big to fail just means the government will decide who pays the bill.